Who's this? Oh, you're an entrepreneur? Oh, you're a real estate investor. Oh, you're trying to learn from those who did it. Well, come into the lab then. Put your white coat on, gloves on, notepad, and let's build, y'all. Real estate experiment. What is happening, y'all? Today, I have the pleasure of having Mike Morawski in the lab with us, dialing in from Chicago. And listen, it's a pleasure to have you, Mike, here on the show. And I want to give you your due diligence and introduction, much deserved, because when we talk about having experimenters who come into the lab who have experimented in a lot of different models, I don't think there's anyone else who's more qualified to be wearing that white lab coat, having done as many experiments as you have. So without further ado, Mike, welcome to the lab. What is going on?
Hey, Ruben, thanks for having me. And God, I love the name, real estate experiment, right?
Absolutely.
Awesome.
Absolutely. Listen, Mike, where do I begin? I mean, I almost wonder now when you introduce yourself with all that you've done in the umbrella of real estate. I know that you're big into coaching now, but, from you coming out the gate of, being a general contractor to having your own company and then selling it and then getting into sales and selling your first year, I think it was like 78 sales that you had. And then the next year after you built a big team, you're sending 125 and you're doing you're just doing volume and you have this consistency and I want to get to it because I want to talk about how you're thinking of the exit strategy as you're building this company. Now then you got into private equity and then you got into from what I understand, and I would love to understand and dive in a little bit deeper because I think, that is how we ran into a little bit of issues and we'll talk about, but you've raised so much money from, if I'm looking at my notes here, you're doing like 60 million, you have 18 million, you have 7,500 units that you're managing. You went from sales, you transitioned to investing, and then you got into coaching. So for you, I mean, when we say entrepreneur and experimenter, I believe your name is right there. And for me, I'm curious, when we meet you, how do you introduce yourself today, having done all these things in your arsenal and having all these things under your belt?
Yeah. So, gosh, you're talking and I got to look around and see who you're talking about, right? Because sometimes you don't realize yourself everything you've done. Right? You look back and you go, holy cow, I can't believe I have all that done, or I've accomplished this or grown this. Here's a key, right? One of the keys I think I've always had is I heard Jim Rohn say years ago, success leaves clues. And he went on to explain that if you do what other successful people have done, you can cut the learning curve and cut the time. So, you talked about that experience I had going into real estate. I sold my construction company. I was burnt out. I woke up one morning and I was like, I looked at my wife at the time. I said, I can't do this anymore. I was banging nails. I was selling. I was scheduling. I was paying the bills. I was, bidding jobs. I was burnt out. And so I sold the company. And the good news was somebody was knocking on my door at the time. So they bought the company from me and I took a year off. We went and we really didn't, but we house hacked a couple houses. And this is long before it was sexy, right, Ruben? Right. So she's screaming at me because she's walking on nails. But, today everybody does it because it's like part of life, right? And that's how you graduate into real estate, or how a lot of people do. And I went into business and this guy made me a cassette tape that I listened to over and over and over again. And the fundamentals, the simple fundamentals that he taught me on that tape, I implemented. Here's success leaves clues. And I sold 78 houses in 9 months. I was Remax Rookie of the Year that year. And it's because of scripts and dialogues, being able to talk to people and be able to handle objections and walking through the fear, right? I went on, I built a team selling 125 homes a year. And did that for about 10 years.
So Mike, I got to stop you for a second because that's I like this trajectory and the ascension. And I want to take a step back because when you started before the cassette, you from what I understand is you had issues with, understanding difference with working on the business and versus in the business. And what I understand is you actually had a great contracting business. You had a lot of guys working for you, but you were just spent. And so what talk about, did that year give you the time to think about, hey, there's a better way? Because obviously we're going to get into your story and how many different business models that you came. So was that like a light bulb moment where like, I'm going to continuously always seek out a better way? Or maybe it was not, maybe I'm completely off. I'm just thinking like, what's going through your head as you made that transition into, again, from that time that the cassette tape was handed to you?
Yeah. I don't know what was going through my head, honestly. I was 20 years old, 23 years old. And, my wife and I, we were living together and we sold the house. We got married. We started the house hack, a 2-flat. And I didn't, real estate wasn't in my sights. I wasn't thinking about real estate. I don't have a background of real estate history in my family. I don't have an entrepreneur background, but I started reading books, right? About, that difference between working in your business. I read a book called The E-Myth by Michael Gerber.
Of course, Michael Gerber.
And he talks about it. He says, look, man, most people go into business and they're a technician, right? You're a contractor, you open a contracting business, you're a technician, you're working in the business. You never have time to step back and work on the business. And until an entrepreneur realizes that they have to work on the business and get out of it, your business tends to stay flat, doesn't really have that growth. I didn't know where I was going to go, but I knew that this real estate agent was hanging around, and I got to be friendly with him, and he was really successful. I mean, back then he was making over $500,000 a year in commission, and that was unheard of back then. House prices were $30,000, $40,000, $50,000, and it took a lot of house sales to get to that point, right? So I went to him and I said, hey, I'm thinking about going into real estate. And he just really encouraged me. He said, I think you'd be good at it. You've got a great personality. You know how to deal with people. You're not afraid to ask questions. You're not afraid to take the next step forward. I'll teach you what you need to know.
Sure. And how'd you find this guy, by the way, Mike?
I had a house for sale by owner.
Yeah.
And he showed up as a real estate agent to sell that house. To help us sell that house. And I was like, nah, we'll sell it by ourselves. And he kept hanging around. And here's the deal, right? And I don't talk about this very often because people really don't ask, but he had a process for the for sale by owner. That was a very simple process. And here's really what it equated to was giving back. Hey, Ruben, what can I do to help you? And that was the philosophy. And I learned early on from him that if I go to the for sale by owner and say, hey, listen, I'm going to give you my service for free, and I'm going to help you get your house sold on your own, and I don't want any commission for it. The only thing I ask is that you don't sell your house. Give me an opportunity to show you what I can do as a listing agent. Boy, Ruben, I went on 6 or 8 of those kind of appointments every day. I went out and I had flyers made, brochures made. I did open houses for people. I put signs up. People would call me and ask me questions, and I'd get answers for them. And I'm new in the business. I'm green behind the ears, right? So I'm just like talking to people and building relationships. And the next thing I know, these people aren't selling their houses, so they're calling me. Before I knew it, I had 25 or 30 listings on the market. And I kept that pace for, 10 years.
Talking with people and building relationships. It's so crazy, Mike, because I was just telling this to my sister, and her friend was here and she was visiting in town. She was a little younger, and I'm always kind of like saying, hey, man, here's my biggest key takeaway. And one thing I was saying is to stand out these days is to simply serve. Genuinely, because you don't even get that with customer service anymore. And it's sometimes we get on these on the show and we listen to episode after episode. Hey, what's that secret? What's that secret that Mike had? And for me, from what I heard, it was again listening to people, fostering relationship, and building these relationships, but then eventually just turns into business naturally by over delivering. Did I paraphrase that right, or do you have an additional key
Yeah.
takeaway? Because
And
that's what I got out of that.
I don't even know that it's by over delivering, because how do you over deliver? By getting to be somebody's friend? Hey, listen, let me tell you this, right? This thing today is
Mm-hmm.
probably the most powerful tool that's ever been built. And it's an iPhone that I'm holding up, right?
Yeah,
Um, the problem is with it that it takes away from this, Ruben. You and I sitting down, having a cup of coffee, looking at each other in the eye,
absolutely.
husband and wife talking about something substantial, looking into your spouse's soul, building a relationship with people. Everybody's got their head down today and they're texting, right? And hey, I do it too. I
Yeah.
mean, it's how people communicate today. But I try to teach my kids. I say, hey, listen, do something different. Get out of your own way. One of the things about these podcasts is same thing. This guy made me a cassette tape, and that I
Right.
listen to over and over and over again.
Mm.
And it's the same thing with these podcasts today. I'm going to drop a dozen golden nuggets on over the next half hour here. Make sure you got a piece of paper, write them down. Just like success leaves clues, build relationships.
Mm.
Those are key principles, I think, for people today.
I love that. So building relationships, success leaves clues. You've said that a few times, so I don't ignore it when someone like you of your standard comes in and is repeating that. I think we should take a note of it and see how you were able to apply it. So I want to make a few key notes here because I think you made some good points. You talked about reading a book. You didn't come from a background of real estate, etc. You're house hacking just because you didn't per se have the vision. But then from what I hear, it sounds like picking up a book and then getting closer to the source of a gentleman who had fostered that relationship with you, and then almost being tucked under his wing, but he didn't do it on his own time. He gave you a cassette to work with. Let me ask you, just maybe fast forward. I know you're big into coaching today. Does that relate back a little bit? Kind of like, do you coach because of that, or do you even think about it? Is that maybe kind of something coming full circle here, or what are your thoughts on that?
Yeah, see, I've always looked at myself as a coach. All those houses I sold, 70% of my business was investor business. People didn't want to real estate agents back then were not investor friendly. They actually would tell you, oh, stay away from the investors. They just want to draw your time, suck your time. But, I was investor friendly. So I built a huge database of investors, which down the road benefited, right? Hugely.
Yeah.
And so, it's that giving back. How can I help somebody else and make your life a little bit easier, right? Give you something that you need.
Yeah, we're going to fast forward right into that because I think, you talk about the relationships that kind of helped you get into the investing side. So after the selling side, you're building a team. At that point, you've almost, at that point, have you replicated essentially what that gentleman had given you in the cassette, and you said, what's next? Like, what was that ascension? I want to see how you think. The reason I'm asking this question, I want to see how you think. And maybe it wasn't intentional, maybe it was at the time. So I'm curious as what the next step was for you as you're kind of making these record sales and rookie of the year, et cetera.
Yeah. So, you said read a book, right? And I've read 1,500 books in the last 25 years. So the reason though is because I'm an advocate for continually educating myself. I didn't go to college, right? Early on, I went later, but I didn't go to college, but I got my knowledge from reading books and watching what other people did, biographies, business books, how to, those were instrumental in my life building a business and learning how to do things different. I've always felt I was a coach. I coached my clients in how to buy a house. My construction background helped a lot, and it helps today. And I don't tell people you need a construction background because you don't, but I'm just saying it did help in that niche that I found myself in a lot, and where I find myself today, actually. And it's a continual process of pushing forward. And then, I got a coach. So I'm in real estate a couple of years, and
Right.
I'm at a seminar, and I say, I'm getting a coach. And I'll never forget the first time I wrote a check for $1,000 and walked away from that table after writing that check. I went, holy crap, how am I going to pay for this? $1,000 for 1 month of coaching. So I paid $1,000 a month for 20 years, right? You do the math on that. And back then when I started coaching, here's what you got. You got one half hour call a month or a week. So you got 4 calls a month, 4 30-minute calls. So for 2 hours of coaching, I got, $1,000. But here's what my coach did for me. And this is what I do for the people I coach is they teach me something, they give me an assignment, and then they hold me accountable. So now when I come back next week, they want to say, what'd you get done? Teach me something new. And I wanted to make sure that I got it done, because if I didn't, I always felt like, oh God, how do I tell them I didn't get this done? But I got the assignment done. They give me a new assignment. I go back and do it again. It's that continual stretching. And I say that coaching caused me to grow my business 20% a year for years, just because of the continual stretching. And I never kept the same coach. I talked to somebody today, or emailed with somebody today. They said, oh, I've had the same coach for 15 years. And I thought, wow, why haven't you had 5 coaches in 15 years? So
can you elaborate on that? Because I think that's really important. Are you coming from a place where you're saying once you maybe pass the level of your coach, you keep on coaching higher? Or do you have something along those lines, or do you actually believe, no, coaches are for accountability, and maybe you get different coaches to see different blind spots? Like, where do you stand on getting different coaches, and what's your reasoning behind it?
So here, picture this, Ruben. You and I coach, I coach you for 2 years. We become friends, right? At some level, I know about you. I know about your family. I know about your relationships. I know about your business. I know who you are at the core. We become friends. A good coach can't be your friend. I've told people, hey, listen, you have to go on, okay? And I say that kind of like there's a level there, right? You need to go on and get something else from somebody else. So I've left coaches because I've been like, I remember one coach in particular, and I told her, I said, Mary, I said, you've done so much for me in the last 2 years. I said, I think I need a new coach. She goes, it's funny, I was just thinking about that. She goes, we've really become close, and we became friends, almost intimate, but it wasn't intimate. And she just knew so much about me and my wife and my kids and my business. And I knew about her and her husband and her kids. And it was like, man, I'm not getting that stretch anymore. The mind's like a rubber band. Every time you pull it, it'll never go back to its original elasticity, Yeah. So the more we stretch our mind, the more somebody pushes you, stretches you, the more you're going to grow.
Yeah. I'm curious about this, by the way. I'm curious to hear what your thoughts are. What are your thoughts on getting a coach that is not exactly where you want to be, but maybe is a step ahead? Do you believe in getting that? No, you got to have the end all be all. Or do you believe in getting coaches for different levels?
Yeah, you know what? Get a coach that's going to stretch you, right? Because if your coach is 10 steps ahead of you, that's probably a good coach for you, because they've got the experience, they've got the knowledge, they might have some systems that you can learn from. Remember, success leaves clues. So if a coach has been successful and they're 10 steps ahead of you, why would you not want to be coached by that person?
Yeah, very interesting. So let's go into your transition, because you went into sales, residential, build a big team, and then you said, that's not enough. I got to take it to the next level again, and you got into investing. What did that transition look like? Was it another book? Was it another someone in your circle, in your network? Tell me about that next step for Experiment Nation, so they know what that next step could look like for them if they wanted to take that next step. Again, we're going to note the blind spots as well.
Yeah. Remember, history's like bell bottoms, right? They come back. So they'll come back in style. Straight legs today, but we'll see bell bottoms in a couple years.
It's funny what you're saying. Speaking of fashion, the white, what is it? The flaring out pants are back in style. It's this is Q4 2021. I'm seeing it. I'm telling you, Mike. I'm seeing it. It's out here. So what you're saying is 100% right. History will repeat itself. Tell us about that next step up for you.
Yeah. So here's why I say that, because right now, watch what's going on in our environment, in our economic environment. Okay.
Sure.
So 2005 rolls around. I've got 7 people working for me. I'm selling 125 listings a year and very little buyer activity because I give most of it away and just collect a referral fee from it. Because I wasn't a buyer. I wasn't buyer centric. Right.
I like that, by the way, that you're very, this is what we will do. This is what we won't do. Interesting.
So 2005 rolls around and I go, man, this market is shifting and I don't know what I'm going to do, but I see it coming. I wasn't sure what it was. Prices were really high. The P&E in the stock market was out of balance. Everything was like the fundamentals were not right. And I knew something was going to happen, but I didn't know what. So I said, you know what? I've always wanted to be in the apartment business. Maybe now's the time. So when I had the construction company, I did a lot of work for a couple of big syndicators here in Chicago. And I always understood this. I understood the private equity model. You raise private equity, you marry it with a great real estate deal, you stay in the middle. As long as everything goes well, everybody makes money. Yep. 2005, I said, let me try and syndicate an apartment deal. So I go out and I syndicate my first apartment deal.
Coach, with a coach or no coach?
No coach. No.
Interesting.
Yeah.
Okay.
So I say, I'm going to go try and do this. I find an 11-unit deal and I put a little crazy ad in the newspaper, classified ad for $45. Here's what it said. Real estate investors wanted. My phone rang off the hook. Ultimately, from that one ad, I raised $500,000 in about with less than a year. But I closed that first deal. I said, man, this is going to be unbelievable. So I made some mistakes on that first deal, went to my broker, developed a buying strategy. And my next deal, I went from 11 to 64 units on my next deal. And then I went from 64 to 187. But here's what happened. I raised $18 million in 30 months and bought $60 million worth of real estate. It was 4,000 apartments in 5 separate markets. And I vertically integrated a property management company managing 7,500 units also. So in 30 months, I built a company pretty close to $100 million in value.
Can we hit a timeout?
Yeah. Lesson number 1. I grew way too fast. Very unstable.
I mean, so let's unwrap that for just a bit, because this is for you. This might seem like, you talked about pinch me. I mean, that's big. What do you think is let's go back to even from the 11 unit to the 64 unit. Was it the same thing that worked on the 11 unit that worked on the 64 that worked on the 187, or what things changed along those lines? Because I want to understand the growth here.
Yeah. So great questions, by the way, Ruben. So the thing is, I bought this 11 unit deal and did no due diligence. I didn't look at the market. I didn't look at the early evaluation traps. I didn't look at the financials. I took the seller's word. Here's what the seller said. Oh, you can buy this thing, go in, rehab these apartments, raise the rent $75 to $100 a month. You'll get new tenants, fix the parking lot. If I showed you a picture of this first deal, you'd laugh, right? I look at it now and I go, oh my goodness, how could I ever even have bought this thing? It was an old hotel, steel railings on the outside, a broke up parking lot. And, it had 28 domestic dispute calls a month from the police department. In February, that's a perfect month, right? So,
like that.
So all of a sudden, I've got this bag of bricks, and I go, holy cow, this thing's an albatross. It's an alligator. I don't want anything to do with it. I became a don't wanter. And so I went to my broker, and I said, look, Ryan, I said, we have to think our model. We have to think of a buying plan. And he and I spent about 3 hours together and developed this buying plan. And the next deal I bought was a garden style 2-story Class B property, pitched roofs, a little bit on the brick front, mostly 2-bedroom units, had a parking lot that had 1.5 car spaces per unit. It had interior entrances. It wasn't exterior entrances. That was my buying criteria, right? I knew I needed to be at a certain price point. I knew I needed to have a certain cap rate at the time. So I knew what my metrics were all of a sudden, right? Because I had such a bad experience here. And moving forward, I bought that kind of a property. That's what showed up in my world because, what's the key word today? Build an avatar, right? Who's your client? Who's your person? What do you want? They show up. It showed up in my life.
Sure. Mike, by the way, that first deal, the 11 unit, did you raise capital on that?
Yeah. 200,000 from that little ad in the newspaper.
I'm just wondering, were your investors all like, yeah, this looks good? When you I don't know if you put an offer memorandum together at the time, that's just very interesting. That kind of went through and you were like, yeah, sure. Looks good.
Listen, the first two investors in that deal, I didn't even know they came from that ad in the newspaper, right? So I barely had 30 seconds to build a relationship with them. But my excitement, I was so excited. I'm going to get this deal done, right? Mm-hmm. And I think a lot of times people are they don't go at it full steam, right? They back off a little bit, and your enthusiasm as an individual, your belief as an individual will sell somebody, right? They say, hey, find a great real estate deal, the money will show up. Yeah, that's true, but they believe in you. They don't believe in the real estate. They believe in you.
Mike, that's so good. I love that. I'm going to take that away. That's a big one. So enthusiasm will go a long way. And it almost boils down back to the confidence of hey, this guy seems like he's in, I'm in. And I always say, if I were to wish for one superpower, Mike, I always say that it'd be the ability to convince people, because when you can do that, it means that they believe in you, that you have the confidence and you can convince them to do something because you're enthusiastic about it, you believe in it, and then people will follow. Right. So I love that key takeaway. The other thing I was going to ask you is, do you think, Mike, because I think about this too sometimes when hindsight's 2020, if there's two versions, there's Mike 1 sits on this and doesn't take this action, doesn't build any momentum, doesn't have any enthusiasm, or Mike 2 analyzes deals for the next 5 years and it's got to be perfect, doesn't take action. I mean, wouldn't you pick? I'm curious. I don't want to sway you towards any way, but which Mike do you pick? Because I always question, even when it's a bad experience, was it truly a bad thing that you got started off with a bad deal? What's your take on that with all your years of experience?
Oh, heck no. It was a great thing I got started off with a bad deal because I was able to put together I realized very quickly that I was able to put together some systems and strategies that now the next deals were good deals, were better deals, right? Yeah. It's like underwriting. Here's what I teach people about underwriting is when I got in the business, I didn't have a fancy tool. I didn't have a spreadsheet. I didn't have a big blown out Excel, underwriting tool. So I underwrote by hand. So when I figured out I needed to underwrite, I started to write down all the metrics on paper. I'd go through a couple legal pads, just rent growth, expense growth, projections, what's going to happen. What it caused me to do was it caused me to figure out what the fundamentals were. Hey, what if rents went up? What if they didn't go up? What if the price was this? What if the price was this? I'm a big what if guy. You've got to ask what if, right?
Yeah.
What if the market stays strong? What if the market changes? See, I didn't know that all the way along the way, right? We learn these lessons along the way. So so today I have a big, robust, institutional grade underwriting tool that we've built over 20 years, right? Yeah. And it gets better it's like good wine, right? It gets better with age. I don't drink wine, I don't drink, but I'm just saying,
Yeah. I like that. I like that. I mean, you indirectly were saying this right here: experiment, fail, learn, repeat is
Mhm.
where I was going at. Is you know, for experiment nation, it's experiment forward, and that's why I have guys like you come into the lab to share that. You know, I believe in momentum. Whether it's in the wrong, and again, we have shows like these so that you can put momentum towards a direction through a proof of concept. Why? Because success leaves clues, and I think you're leaving a lot of clues for us. So, um, by fast forwarding, you talked about, what if this, what if that, what if there was a crash coming in, very similar to what happened in 2008. What if that happened to you, Mike? And what if you actually had to deal with some of the repercussions at the time? Can you tell us a little bit about that? What if that actually happened?
Yeah, absolutely. So 2005 rolls around. I see the market starting to shift. I go into the apartment business, and I thought, here's what's my thought: the housing market's going to crash, but people who are going to lose their house are going to need a place to live, so they're going to find shelter in apartments. Apartments are going to be a safe haven, right? So I buy all these apartments. I scale the business really fast. 2008 rolls around, and it was like hitting a brick wall in a freight train at 200 miles an hour. We started to come off the rails. And we came off the rails because grew too fast, very unstable. I thought I had a good team behind me that was doing construction and stabilizing properties and retenanting properties. And none of that was going on at the rate it should have been going on. You can build this beautiful business plan. You can have all these goals. You can get all this knowledge. But if you don't take the right action and have the right execution, this goes back to coaching and accountability, right? You don't go anywhere. It's like being stuck in a snowstorm trying to spin out of that ice you're stuck in. So I was very unstable as a company. I didn't raise enough capital, so I was undercapitalized. I was over leveraged. I bought $60 million worth of real estate at 15% down, uh, 85% loan to value. I don't know who was more at fault, me for taking the money or the banks for giving it to me.
Yeah. Can I want to make sure, because that's such a good point, and I always hear it, and I want to hear it from you. Uh, what it looks like to not be over leveraged. What's the sweet spot? Is it 20? Is it 25? Is it 30? Because you hear the word over leveraged, but then you don't really know what it should look like on paper. Should you be raising more capital so you have 40% in? Like, what is that number that would, keep somebody afloat for another crash?
Yeah. Um, I don't know that we know truly what the answer to that question is. Here's where I think there's safety. If you're 25% in,
Mhm.
75% LTV, I think you have some safety in that. But I want to tell you that today, in today's environment, I'm underwriting deals at 65%. So we're raising more private equity, right, on a
Yeah.
deal. I'm only getting 65% from the banks. Uh, First of all, the banks, the agencies, they're all going to start to look for that. And as we start to move over the next couple of years here into some uncharted waters again, I think we're going to see. But I think that you'd be safe at 65 to 75% loan to value in that range.
Can you explain, Mike, for someone who's listening, why that makes such a difference into an investor that survives and one that doesn't? Like, you might think, really, like 10, 15, really, like, why?
Okay. So I think it's a long explanation. The,
Mhm.
the the bottom line is your cost of capital is less, your expenses are less. So if you have a shift in occupancy and your NOI drops, your net operating income drops, and
Mhm.
you can't pay your bills, your bills are less, so they're easier to pay.
You're
So
saying the debt service is a lower payment. Is that what we're getting at here, or is it more granular than that?
yeah, no, that's a good place, I think, for somebody to
Always.
understand it. So, but there's another side to it. So you've got a private equity piece, you've
Mhm.
got your investors. Um, This becomes an education process for the investors. So the last several years, that private investor has really been spoiled. They're in deals that they're seeing high teens IRR. They're seeing 8 and 9% cash on cash returns on deals. That's coming to an end. So
Oh yeah, we've seen that.
investors need to know right now. I'm underwriting deals today that my investors are going to see a 5%, 6% pref with maybe a below 15%, 13% IRR total all in on a deal.
Hmm.
Listen, I have a buddy. He's been in the business about 30 years. He's done hundreds of thousands of units, and they're underwriting deals today at 50-50, and they're paying their private equity investors a 5% pref. That's it. No
Wow.
back end, no equity. You're getting a 5% pref because they know where the market's headed.
Hmm.
So once you've been in the business a while and you've seen the cycles, now it's time to prepare because it's gonna come to an end, and everybody's talking about it right now, but nobody. So just it's an interesting dynamics right now.
And that's why they got to plug in, because success leaves clues. And I think you took it upon yourself, from what I understand, Mike, to kind of solve this problem on your own. You want to elaborate a little bit on how you had done this experiment, 85 LTV on 60 million, and you're in a position where we haven't even gotten to all the businesses that you've had. Again, you had a successful exit. You're building other businesses alongside as well. Do you mind just giving us just a quick, I know you had the vertical integration property management company. What were the other businesses involved in that were so profitable that kind of led you to start moving some money around, and which we'll get to as to maybe not to do in the future. But what were those other businesses as the entrepreneur that you are, that you were building alongside the way as well?
Well, I had three core businesses. So I had the private equity company,
Mm-hmm.
which we raised equity and we bought real estate. I had the property management company, and then I had the construction company, right?
Gotcha.
So we were all under one umbrella. But I had 38 individual properties, apartment complexes underneath that umbrella. And here's what happened, right? 2008 came around, the market got real rocky. I was undercapitalized, over leveraged. I grew too fast, very unstable as a company. And then I didn't pay attention to the details. There were people around me saying, "Hey, things are going on," and I wasn't listening. And I said, "I got this under control. Don't worry about it." Well, 2010 rolls around, and I've got occupancy problems. I've got cash flow problems because my debt is so high. My interest rates are so high on properties that I can't pay my bills. And so I say, well, if I take money from profitable companies and put them in non-profitable companies, move money back and forth. Here was my thought behind this. I've been involved in a number of recessions over the years. I've seen, recessions, they last 17 or 18 months, 10 to 12% correction in the marketplace. This thing's lasted 7 or 8 years, 40% correction in the marketplace. How do you weather the storm? Well, my attorney and my accountant both said, hey, you can move money back and forth, just leave a paper trail. That's fine. So I did that. Here was the problem. I didn't tell my investors. So I didn't disclose to my investors the movement of capital. I thought, that when the market bounces back, I'll put the money back, and then I'll go to them and say, hey, here's what we did. I'm a hero. Look at the profit we've made. And that didn't happen. I never had a chance for that to happen. Because of the non-disclosure issue, I wound up being charged on wire fraud and mail fraud charges and sentenced to 10 years in federal prison.
Wow. Who makes that call? Is that like the like who is lifting the hood and finding out that Mike is doing things incorrectly? And just so we know.
So, it's a perfect storm, right? We were doing some work for a third party company, and the guy we were doing some work for wound up being indicted on some other charges unrelated to anything we were doing with him, but we were named as a victim on his case. At the same time we were named as a victim on his case, two of our investors wound up at the same attorney trying to file a suit against us to get their capital back. And, you're so in liquid at that point. There's no capital around at all to give back to people. Well, this attorney calls the FBI. So we've got this, we're named as a victim. The attorney calls the FBI, and then that's where it all happened, right?
And
So-
they're calling, just so we understand, they're calling the FBI because they're saying, "Hey, I'm a limited partner. I want my money back." I mean, that's not even a thing, is it? Like that's that's not even in the contract, is it?
Yeah, I was getting returns, and now I'm not getting any profits back, and nobody's returning my phone calls. The noise was so loud, right? So here I'm on vacation in 2010. And I don't think we're doing anything illegal, right? I just think that, we're in trouble financially and upside down. And
we try to problem solve. Yeah.
Yeah. So I go on vacation with my family in 2010. I come back in August of 2010, and my partner hands me 2 business cards. He says, "Hey, you need to find a criminal attorney." I'm like, "A criminal attorney?" I said, "What are you talking about?" I said, "I know we're in trouble financially, but criminally?" He goes, "Hey, I can't talk to you anymore." I go, "You can't talk to me anymore? What do you mean?" So remember, this is August of 2010. Right about that time, we put all of our companies with a receiver. A receiver is somebody who takes over all the assets to manage them for the investors. It's like a voluntary bankruptcy, but we didn't do bankruptcy. We just kind of wanted to resolve ourselves of all the noise and the investor issues. So we give all these companies to a receiver. Well, I go see an attorney. I find an attorney, and the attorney says, "You don't have anything to worry about. You guys didn't do anything wrong, and it's just noisy right now. Don't worry about it." And I want to say that 5 years before I got indicted, the SEC would have stepped in, slapped me on the hand, fined me $250,000, tell me to go back and straighten out my business, and don't let it happen again. And
Right.
I'd still be in business, be able to try and save everything and put everything together. And, that doesn't happen anymore. Now they just put you out of business, they destroy you, they take everything from you. And that's how the system works today. So I go see this attorney. He says, "Don't worry about it." Well, that's August, October, November of 2010. 2011, in May, I find out I'm getting indicted. I get indicted in May of 2011. At the same time, I find out that in August, 6 months earlier, while I'm on vacation with my family, my partner goes to the grand jury and testifies against me.
No.
They craft this story to keep the in-house legal counsel and our director of finance from being charged on anything, and he crafts a deal to get less time. So I get sentenced for 10 years, and he serves 30 months. So now I say that, but I broke the law. I didn't disclose to my investors. I should have told my investors what was going on. And if my investors would have said okay and signed off on it, everything would have been fine. But non-disclosure is a big deal. If you're a real estate agent, make sure you're disclosing things. If you're an investor, if you're in the lending business, make sure you're disclosing things. Tell everybody everything. Be transparent. So
Let me ask you, if that was disclosed, because I think we're learning a big lesson here. Do you think investors would have been cool with it, or like, what's the worst case scenario? You would have just like, you're in a bind. There's, the occupancy is low. There's no money. There's no juice coming out. What's next? Like, what's the alternative here?
Yeah. I should have let a half a dozen or a dozen deals go to foreclosure. I should have let 25 investors get hurt. And I didn't do that.
Okay. And I want to go back to that for a second, because you said something very clearly. You said something about you had success and you weren't listening to the right people. I want to kind of just put a bow on this and tie it all together. Do you think that you get to a point where success is almost blinding? Like you've gotten so much momentum that you feel like everything you touch is to gold, and that you touch turns to gold. And when that, if you do believe that that happens, do you feel that sometimes you get less coaching when you become successful, and it's so important to continue to get it? Because I think that coaching kind of fell off somewhere in between there. Like, what's your lesson when you're reviewing these things? I'm just trying to piece it together here.
So you we put blinders on, right? And we try to stay focused and move in that straight direction, but leave your blinders loose. Pay attention to the peripheral vision around you. You need to see what's going on. Let me just tell a story here. 2008, this is the first thing that happened, right? I'm closing the biggest deal that we've closed. I'm sitting in an office in a title company in Cincinnati, and I'm waiting for my office to wire $500,000 earnest money, the deposit money, to close this deal. It's not coming. It's not coming. I've been there since 11 o'clock. It's 10 to 5. I finally get my partner. I can't catch him all day. I finally get him on the phone. He goes, I don't know how to tell you this. You don't know how to tell me what? He goes, I don't have the money. I moved the money from the escrow account into the business account. I said, hey, we had this conversation when we first went into business. You never did that. You never do that. He goes, I know. I thought I'd have the money back. We had a problem. I said, listen, never an excuse. So I dry close. I sign all the paperwork, say I'll have the deal funded by Tuesday. I go home. I raise the rest of the money, give some equity away on the deal, get the deal closed. So all that was fine. He eventually put some of the cash back together. And here's the point. I never told my wife about business. We never talked about it at all. Once in a while, because she worried, right? And I never wanted her to worry. And, once in a while, I'd say, hey, I met a great investor today, or we closed a deal, or I raised this money, or that was it. But so I didn't tell her what happened. That was Wednesday. On Friday night that week, we go to dinner. We go to dinner with my partner and his wife. And on the way home from dinner, she says to me, I don't trust him. And so now I think I'm going to be a good husband. And what I say is, hey, honey, I got this. Don't worry about it. Trying to provide security. Don't worry. I got your back. Everything's going to be fine. We're going to be okay. What I should have said, and I want guys to pay attention to this because your wife a lot of times is a lot smarter than you are. Mm-hmm. I should have said, tell me more. What are you seeing that I'm missing? Right? But I just thought, man, I've got this under control. I'm trying to drive the bus. Well, a week later, I'm out to lunch with my attorney, my outside legal counsel. Him and I have been friends for years. He's done real estate for me for years. We're leaving lunch, and he puts his arm around me in the parking lot, and he says, I got to talk to you. I said, what's up? He says, I don't like what I see going on. Your partner's up to some things that I'm not real sure about, and I think you need to take it. And Bob, don't worry about it. I got this under control. I got it handled. So twice in the course of a week, these signs come up, these red flags come up, and I just ignore them. And we do that so often in our life. Think about it now. You could be underwriting a deal right now, and you like the deal so much, maybe even love the deal, that you miss some of the metrics or fundamentals that hey, think about an exit cap rate. How are you looking at an exit cap rate today on a deal? Where's the market going to be? How are you projecting that? So, we've underwritten in the last 6 months, we've probably underwritten 200 deals, right? In different markets and different, so you really have to pay attention to what's going on right now. So I tell that, so listen to people around you, watch for the things going on in your life, especially when they come up in your face.
Mm. Well, always goes back to the clues, which I love. And I think you put that so well together. So this is the part where I want you to share with our audience what happens after and how do we tie this together. Did you do the 10 years, Mike, or what happened?
Yeah, so I went to prison. I went to prison in 2013. And, I always tell people, I say, look, I never flew private. I didn't have a big house. I didn't have a boat. We didn't take exotic vacations. I didn't have a fancy car. I was the neighborhood baseball coach. I was home every night for dinner. I had a great marriage. My wife and I were best friends. And I got ripped from that to live in a 12 by 12 room with three men I didn't know, nor did I like at the time. Wondering what the hell happened to my life. I had 3 green outfits and 5 pairs of cardboard underpants. And it was like, now what? So I was walking around every day going, this can't be real. This can't be going on. How am I going to get through this? Well, I was in prison about 17 days, and I thought my wife and I would be fine. Matter of fact, all the way along the way, she said, we're going to be fine. We're going to get through this. And I was in prison about 17 days, and she said she was leaving me and divorcing me. And it wrecked me. Matter of fact, the joke around guys around me in prison were, take his shoelaces because we're afraid that he's going to hurt himself. So, for the next several weeks, I walked around wondering, what was I going to do? How am I going to put my family back together? And you're in this place that's not good, right? I went from being a marathon runner to being 35 pounds overweight. I hated myself and just, wanted the misery to stop. So I walk in the gym one day, and I always tell people, I say, look, I was just window shopping. I wasn't looking to buy anything. And remember, I'm 35 pounds overweight, hate myself. I walk in the gym. This guy walks up to me and he says, hey, cut it out. Don't let these people beat you. All they want to do is take everything from you you've ever known. They can take your real estate, your money, your business, your cars, and they can destroy your family, but they can't take who you are. They can't take what you're made of and who you are at the core. You can get this 10 years back. He said, you can get your life back and build all those companies again. He said, come to this gym every day, start working out. And Ruben, we all have these turning points in our life, right? Those moments where you go, wow, really? And this guy said, come to the gym every day. And I took him up. I said, okay. So I started going to the gym. I started working out. I started feeling better. I started losing weight. I wound up going to college. I got a bachelor's degree in theology over the next 4 years. I wrote 2 books while I was gone. One called Exit Plan, Your Complete Guide to Multifamily Investing and Why You Need an Exit Plan Before You Buy. I wrote a book on property management. I wrote an ethics course. I taught real estate investing, property management, and ethics for 6 years in prison. I was on an outreach program. I went into the community. I told my story to major corporations and small businesses, college students. Probably 40 times I went out. And then I met a professor from the University of Minnesota, and he and I co-authored a paper together that got published this year in the Business Journal of Ethics on an ethical case study that gets taught at the collegiate level today for forensic accounting and sales and marketing classes. Today, I'm in the coaching and training business. I hope to teach people how to not make the same mistakes I've made, how to scale a business, but how to live a balanced lifestyle so that you don't forget the most important things in your life. I let my pride and my ego get in the way and overshadow what was important, which was my marriage and my kids and my family. And, I showed up, but I showed up physically, not emotionally. And, there's a big difference in that. So, I re-engineered myself, and today I hope that my story shares hope and inspiration for people that don't let your past define you, right? Fall forward, experiment, fail, learn, and repeat.
I love that.
Hope your license plate on your car says that.
We're gonna have to make some room. I'm gonna have to talk to the state. But my goodness, way to unpack. My goodness, this is one of the deepest lab sessions that we've had for sure. I love it because it always goes back to the core. We talk a lot about real estate, we talk a lot about business, but I think there was some real fundamental lessons in that turning point too. And sometimes someone planting the seed in you, whether it was from back in the cassette to that gentleman who was, who told you, hey, show up here every day. It feels like there's always a guide, and success, success leaves clues, which is unbelievable. That, it's, you say it so well, but there's no other way to see it. Like the universe will tell you its secrets if you're willing to listen. And it's just so admirable and fascinating, the turnaround and the journey that you've had. And it really is about that there's always something to learn from every experiment that you do. And, I had a mentor who said, when you succeed, you celebrate. And when you fail, you ponder. And sometimes we need to ponder and reflect more, because it allows us to, you don't want to get too high. So with that said, I think you left it so well. You talk about your book Exit Plan, as we look to exit this wonderful session that we've had with you. What are some of the what is something you want to leave, that you want to last parting words, as we talk about the exiting, for our listeners. I think you did a great job of summarizing it all together, but as kind of you wrote those books, as you kind of look back, and forward and back at your life, what is something you want to leave to Experiment Nation, that will forever be able to be listened and tapped into, similar to the cassette player?
Yeah. So, I think I said a couple of things along the way, but success leaves clues, and don't let your past or your stumbles define you, because they're not who you are. Take action, move forward. A lot of you kind of alluded to it before, Mike 1, Mike 2, Mike that would go out and take action, or Mike that would sit back and analyze a deal for 5 years. I think a lot of people kill themselves in the overeducation and the overanalyzation. Stop overanalyzing things, take action. And if you need somebody to hold you accountable to execute and be held accountable, find somebody to do that. Whether you go get a coach or you have, your spouse hold you accountable, but go and take action. Absolutely. And with that said, before we give Experiment Nation an opportunity to connect with you, speaking of Mike 3, as I like to say, the version we're looking at right now, what's next for Mike 3? What's next for you? What are your big aspirations, so we can tap into that a little bit more? You've written books, you're coaching. What's the big thing that's next? And we're in Q4 here, going into Q1 2022. What's next on your radar that we should be on the lookout for? Yeah, so a couple of really cool things have happened recently. So, I came home the week they closed the world down for the pandemic. So I've only been home maybe 20 months, and been at this for building a business for about 14 months. But I've been doing this all my whole life. I started a talk the other day. I said, man, you always wish you had a little bit of time extra to prepare, but really I've been preparing for 30 years for this. So, and I think that our journey is really important. I just got I got approved by the SEC to go back and be an issuer and a sponsor of deals. So I'm coaching and training people. I take only a select few clients throughout the year. I have a couple of different coaching programs. I do have a group program, but I work one-on-one with just a select few people. And those people I partner with. I have 2 coaching clients right now that we are doing our first deal in Tampa. It's a 40 unit. We're actually raising private equity on it. And we have another deal right behind it. It looks like we'll go to contract on it tomorrow. It's a 96 unit deal. So, so we're back in the trenches. I just went back in the property management business. So we're managing properties locally, and then we'll self-manage our own properties around the country. So there you go. Back like you never left. I love that. Well, we're going to come back bigger and stronger. So that's the hopes of it anyhow. So there you go. Yeah. Well, if Mike's able to do it, what's your excuse, guys? I mean, you couldn't have said any better. Mike, where can people,
touch base with what you got going on, to keep tabs on you, with this coaching, the books, etc., where we can tap in more into that, and where can we find out more?
So first of all, anywhere you hang out on social media, you'll find me, personally or business-wise. Company is mycoreintentions.com.
Love that, by the way. Great branding.
Thank you. And I go to my website. There's a ton of information there, podcasts and information. But go download a copy of my book. It's mycoreintentions.com/exit plan, and download a free copy for yourself. If you're a passive investor and you're looking for opportunity, reach out to me. I'd be more than happy to talk to you about what we're doing. I love networking with people and connecting. So my direct email is mike@mycoreintentions.com. So feel free to reach out. I love answering questions and helping people. And, I'm just excited about being back in the game and, being able to shed some knowledge for people. So
we're just excited as you are, and we're so honored that you took the time to step in the lab. Again, that's My Core Intentions, right? mycoreintentions.com.
Right.
And definitely tune in to what Mike's doing. Exit plan, get the book, check that out. And we'll make sure that if you're driving, keep your hands on the wheel. We'll include that in the show notes and get home safe. So with that said, Mike, you came, you experimented, you failed, you learned, and you're repeating, and now you're conquering. And just like that, we are out.